Now, here are your hosts, Don Getling and Gino Fonte.
Okay, we're ready for an incredible show today. Very informative, very fun. We have some popular guests backed by Popular Man. And we have a new guest coming in that you're going to have a lot of fun with, Mr. Michael Waxman with Intero Realty. He is a hoot. You're not going to want to miss that. And for the first part of the show in our finance hour, we have Mr. Kenny Harris backed by Popular Man. Thanks for joining us again, buddy.
Thanks for having me back.
He's with First American Exchange, and he's going to talk about stuff that you don't know about. How about that?
You know what's interesting, Don, is that Exchange is kind of like this mystery button, right? Nobody really knows how to use it, when to use it.
It's not talking clothing exchange.
Or other kinds of exchanges.
Hey, this is a spicy show, ladies and gentlemen. If you want to check us out and watch the show, you can watch it live, because this is a live show, i.e. the bloopers that I perform every week. Thursday, 12 p.m. to 2 p.m. But go to donnagino.com, click on Listen and Chat Live, and voila, you can enter the Vault Media Studio, because you don't have a key unless you go to our website and click on Listen and Chat Live, and you will see us performing at our best and see our good-looking, getting thinner all the time, Mr. Kenny Harris.
You know, Don, we were talking about the show being live. And it's definitely live. We do bloopers, and things happen all the time.
We do that for you.
About 22 seconds ago, this wasn't even going to work. We were completely underwater and had a not a wardrobe malfunction, but a technology malfunction.
Yes,
but we got it all up.
Adventure 3.
Yeah, but we got it all up and running, and I'm happy for that. So
yeah, thanks, Shannon. Good job.
So today we are going to go over a bunch of weird stuff in 1031 exchanges that a lot of people don't even know exist, and it's a tax-deferred exchange. It helps you avoid taxation, and if you can avoid taxation, if you speak to your financial planner or our financial planner, Chris Ingram, he will show you how taxation is actually the number one thing that impacts your retirement.
Taxation, avoiding taxation. Any of you listening? Hello, McFly. Avoiding taxation, very important stuff. And
yeah.
Kenny Harris is going to help us with that, right, Kenny?
Yes, I will.
Okay.
Very good. But just before that, let's get into what happened this week, as we usually do with our Word on Wealth. One of the things that we look at every single Thursday, Don, is the jobs report. And I think what's important to look at this week, as we talk about every week, is that we also got a Fed statement.
Yes.
We got the release of the Fed minutes this week. And the Fed minutes, even though they were they're talking about the job market, and they talked about in the job market there's a little slack.
What does that mean?
Well, that's, when there's a little slack, sometimes you lose the fish on the end of the hook. So, we have to, they're cautiously saying it's getting better, it's improving, but there's a little slack. So even if jobs improve quickly, the slack needs to be taken out before wages improve.
Right.
So we're not going to see wages improve until there's a substantial amount of hiring.
And what's inform you a little bit how that affects the economy rebounding. This is why it's been a very slow recovery, Gino, right?
Yeah.
Is because even though we're getting more jobs and jobs are coming back, a lot of jobs are part-time jobs, and a lot of jobs are not making the same money we were making before. You're not getting those raises that you were getting before, because everybody's a little cautious. So it's a very slow recovery, and it has a lot to do with what kind of jobs are coming back and job growth. We need income to increase, therefore, for inflation to even be a factor.
Yeah, we also talked about on the backside, there's more taxation to the employer today than there was 5, 6, 7, 10 years ago.
We see that, don't we?
We sure do. And so that makes it harder for employers to pass on any wage increases to their employees, even if they're warranted and they want to. Sometimes it's hard because of tax pressure on the employers, especially here in California. Oh, my God.
Yeah, that's a good point. So what was our numbers, Mr. Gino?
Well, so last week I said on the show that the 311, close to the 312 number, was just a blip. I was pretty sure that wasn't going to stick. The good news is we're back down to 298, which is close to that. We had the all-time low at 279, and not the all-time, I apologize. All-time in the last 7 years. It feels like all-time low.
That's all we remember anyways.
Yeah, at least in recent memory.
Yeah, who knows about 15, 20, 50 years ago? It doesn't matter now.
But the good news is we've got now 3 weeks out of the last 6 weeks, under 300,000 people being laid off for the week. Initial filings for unemployment. So the trend is getting better.
Yeah, but if you check out our chart, we always post these charts on, go to donnagino.com, click on the Facebook logo, like our page, and we inform you of what's going on a regular basis and stuff. What's really cool is I drew a line that shows that the overall trend has been improving. We've been talking about that. What's really interesting, though, is I drew a second line because we did have, as Gino mentioned, the 279, which was one of the lowest we've seen in a very long time. But the next lowest was, what, 290 there, Gino? And then the next lowest was 298.
Yeah, so it's actually a trend change. We've got a crossover.
Right.
We see this in the bond market all the time. It doesn't mean things are going to get absolutely horrible. It just means the trend may be shifting, and it can't continue to go down all the time. It can't just be linear. There needs to be a rebound of sorts, and I think that's what we're seeing, a little rebound before it continues to get better.
And that's why it's important to listen to this show every Thursday, 12 p.m. to 2 p.m., because actually then you're in the know every week. Not the reports you get from most media that's about 2 months old and usually has some kind of political spin to it. We don't do that.
No, and in fact, so how does all this impact you? Well, good news is the economy is getting better.
Yep.
We've been talking about rates hanging in very low. The Fed statement actually had a little bit of a hawkish tone, so the bond market reacted to that a little bit.
What are you talking about?
It
What's
did.
hawkish?
It did. So hawkish means that they want to raise short-term rates, and
There
it's
you
not.
go.
It's not that they really want to. It's just a matter of should they or should they not. But that was pacified by really low inflation numbers. So the truth of the matter is we don't have to raise short-term rates. So short money will continue to be cheap. And if short money continues to be cheap, that means that large companies can continue to borrow money and invest in our economy. So I see sustained growth for the next couple of years. Anemic, but sustained.
But the good news to tie into that is that rates are staying down because we aren't seeing inflation. The economy is in a slow recovery pace, so therefore rates have been staying low. I mean, they bumped up when the whole Fed scared the heck out of everyone about eliminating our stimulus. That hasn't really affected us.
Not after the initial shock of it wore off. The reality is there's still things going on outside of our country and our new global economy that are having a positive impact on interest rates. So just be careful if Europe gets their act together and Japan gets their act together. That could have, notice the if word there twice.
Yeah, I'm shaking my head. Going, good luck.
But if they do, that's going to have an impact on rates here, regardless of what's happening here, because right now what's happening here is we know we have a recovery. We're just being affected by things abroad.
Yeah, I mean, everything affects it's funny, everybody's like nervous about how much return they're getting on their money here. How about the other countries?
Nothing.
Nothing. Ours, at least you're getting 2.4% back or something like that around here. In Germany and a lot of other places, what, 1%?
Yeah.
Practically nothing. So that's why our money is popular. And therefore, why people continue to buy our mortgage-backed securities, which keeps interest rates down.
And our treasuries.
Yeah.
And we need that to be able to service our debt.
Exactly. So that's it. That's all good news for rates. So go out and buy a home.
Yeah, absolutely. It's actually good for the real estate market, and hands down. So we'll talk about that more with Michael Waxman today during the second half of the show.
Absolutely. There's good stuff coming up. In fact, we've created a new group of the very best professionals in town. And we're going to bring that up real quick because we'd like you to go check out aprgi.com, aprgi.com, which is America's Professional Resource Group. Because we've been able to interview the best of the best, like Kenny Harris, that's with us today, we now know who you need to go to for all kinds of important things in your life, whether it's a financial planner, insurance, trust, bankruptcy attorneys, you name it, we have it in there. Plus, it's an entertainment magazine. You're going to see a lot of local businesses and they're going to find out more about. But when we come back, we're going to teach you all about how to avoid some taxation with Mr. Ken Harris with First American Exchange when we come back.